Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting Asian session live market analysis, explaining the derived forecast and the levels, and also do the market reading for you. And the forecast will be for the week 24th to 28th, and we are on 25th. Yesterday I could not present the webinar, so I am presenting it today, 25th. And I'll explain to you what is expected to happen during the last week of the month of February. This is again based on the statistically derived algorithm with which the forecast is being obtained, and there can be a variation from that of the actual market moves, but still it will be a guiding factor for us. So let me explain to you what is expected in this last week of the month. Now it is the last week of the month, so normally you come across the monthly trend reversal moves. So the monthly trend reversals are known to be very volatile, and after the yearly trend reversal, this is the first time they are going to do the monthly trend reversal moves. And during this particular time frame, and as you know that from month of January, they have been gaining the levels from the first week of January and subsequently gained the levels during the of February, and they have done the higher level consolidations in the case of Euro and GBP, and also dropped USDN and USDCH. Now they are expected to make the reversal of such moves in a big way, and so that is why they are doing a prolonged higher level consolidation. Euro around 1.37 area and GBP around 1.363738 area. 38 they briefly visited, and 36 and 37 area they are doing a prolonged consolidation. And so everybody is cautious to know whether it will pierce through that of the resistance and go above, or it will make a drop. First of all, we need to understand that it is a man-made market. In this man-made market, with a huge volume of money power and taking the positions, the players can straight away pierce any of the resistance or any of the supports in the market, what we theoretically or statistically calculate. So there is no need for them to make the moves as a consolidation and trying to attempt as if it is going to pierce and not able to do that and this sort of thing. So if they want, if the stops are close by and they are above that of the market, and by hitting it, if they are able to get very good profit, they will definitely do that. So there is no hard and fast rule that the market is not having, or Euro is not having strength to pierce the higher levels, or the selling happens at the higher levels, etc. So they are all nothing but our assumptions, but actually the players make the moves in order to earn money. So that is their main objective. So by holding Euro and GBP at a higher level, what they are going to gain? So they are making the swings in the market, and then subsequently they are trying to induce the traders to become bullish and turn long with regard to Euro and GBP, and later on they are expected to make the slide. Instead, he says that he is not able to hear it. I think he has to re-log in. Okay, fine. Thanks, Abhida. Then, once the players build enough sell positions and without upward stop, and they will try to make that drop in the case of Euro and GBP. So ultimately, they are holding at a 1.37. Yesterday also, they have been holding around the same level on Friday close level, and then subsequently they made a very quick rise and the drop during the European session. And during the US session, they made for the drop and then gained the levels, but not to that of the high, nominally to that of the middle level. So they have been doing it, oscillations on either side, and they made the upward stop and as well as the downward stop-ins alternatively yesterday and increased the spread between the low and the high. And that is how they made the moves yesterday. And today, they are expected to make a swing and form of move and further small form of move during the start of the European session. And they are expected to make the drop and swing and slide move could be seen during the US session. And from tomorrow, we should be able to see that, okay, they have been holding high, mainly to build the sell positions, that we will be able to realize it from that of the Japanese session when they will breach that of the range in which they are making the trades. And yesterday, GBP breached the level of 1.66, came down to 1.6584, and then subsequently gained back. And that will give the impression that the market is being well supported at the lower level, but the players are supporting it, inducing the short sellers to do the short covering or do only swing trade to book profit, and then subsequently expect the traders to become long. But once you take a long position, whenever they make an upward stop, and only then we will be able to book profit. Otherwise, even though the market appears bullish, that profit booking opportunity is not given. So that we need to keep it in mind while doing the trades in the current market scenario. Then Thursday, again they are expected to make that drop during the start of the Japanese session and firm up. And swing and slide could be seen during the European session. Swing and slide could be seen during the European session. And swing and drop could be seen during the US session on Thursday, 27th. On 28th, the last day of the month, you will come across the firm up during start of the Japanese session and the slide, then swing and firm up during the European session, and then they will start making the slide and make further drop in the market. So that is how the market is expected to behave. This is a theoretically calculated or statistically calculated informations, but actual market might show slight variations with regard to that. In order to improve on it, we go in for the market reading on a daily basis and try to find what they intend to do with regard to the type of moves in the market. Then next week will be the first week of February. The first week of March. The market is expected to make the trend reversal again, and this time you come across the month gets over in a week and the new month starts in another week. So for 10 days we'll come across the trend reversal moves in the market. So month beginning again, they will try to make the trend reversal moves. So the trend reversal is basically they will try to pretend as a bullish and then drop, try to pretend bearish and then rise. So basically volatile moves will be seen. And so this sort of volatile moves we should be able to understand and aim only to do swing trades during the last week, first week of the new month. And with regard to the levels, what we could see in this week. So, went up yesterday to 1.3773 and came down to 1.3708, and that has not been breached today, and they are holding it. And the market, the live market put page shows the same level, but actually today the market is making range bound swings around 1.3730 to 45 level. So just a nominal swing is seen in the case of euro, but so far they made the spread, and euro is expected to make further drop and go below that of 1.34 and 35 area in this particular week, in the next week. Then in the case of GBP, 66.50 was the expected high, and they went up to 66.79 yesterday. And again, they have formed 66.71 now, and they are holding around that. And yesterday they formed 1.6584 and they are expected to make further drop. And the GBP is a currency which is used to create the market sentiment, and the players act against it of the traders once the traders turn bullish or bearish alternatively. So they are expected to make the first drop in the case of GBP, and followed by that euro is expected to make the drop in that process. Then USD yen, it has formed 102.17 as the low, and they are holding around the 102.53, and 102.69 is the high, and they are expected to go up to 104.50 level this week. And USD CHF 88.75 was the expected low. They came down to 88.54 yesterday. 93.50 could be the high, and so far they have come up to 88.96. In the case of Canadian dollar, they almost went on Friday to that 1.12 area, and from there they dropped the market totally, so about 150 pips. And now they are holding the high as 1.1143 that was shown yesterday, and then from there they have dropped 11055 is the low. They are hovering around that, and they are expected to make further drop. And if you see that USD CAD and Australian dollar are showing negative net change, and that is how they intend to make the moves in the case of the commodity process. Then Australian dollar 89.38 was the low yesterday. They have shown it and went up to 90.44 today, and then started making a slide, and 2 pips negative net change is seen. Slowly we'll come across the drop coming in. So high could be 0.999, that is mathematically derived. So they breached and holding above that, and they are expected to come down below that of 89 and then reach the level of 87 area in the case of Australian dollar. So these are all the range in which the currencies could move, the majors could move in this week. So use them as a guiding factor and try to find out how exactly you can initiate the trading. Now, with regard to the initial lows and the highs, to do the market reading, you find that formed the low 1.3730, but actually in the live market code page you come across yesterday's low 1.3708, and 1.3736 is the high they are just shown. And the platform shows, the code page shows 1.3773. So they are making such a narrow range of 6 pips. In the case of euro, they are holding it, and they are making moves in the case of GBP. GBP formed 66.46 as the low that has not been breached, whereas 66.62 was the high. They breached it, went up to 66.71. So they are holding still above that of 1.6662. So they are expected to make further upward drop towards close of the session, and then start making the slide. So GBP is expected to create the bullish field by making an upward move, and later on we will come across GBP falling, followed by that of euro dropping in the market. Then in the case of CHF, 88.86 is the low, 88.92 is the high. They are not breached the low, the high. And yen, 102.46 is the low, 102.63 is the high, which is also not breached. Normally you come across USD yen and Aussie used to make about 40 pips spread and above during the Asian session or Japanese session. But today you find that they are simply consolidating. That means either due to lack of volume or the players wanted to make whips or moves later on. So they create a calm feel and suddenly make the whips or moves in the market. Then USD CAD 1.1055 is the low, 1.1070 is the high. That is also, they are not breached the low or the high. In the case of Aussie, 0.9015 is the low, 0.9044 is the high. They are not breached it. So ultimately, in all currency pairs you come across that they are not breached the high or the low, excepting GBP. GBP, they breached the high and they are staying above. With regard to the live market quote page, reading it, you find that Euro is flat and Yen is making 3 pips positive net change. GBP is making 11 pips positive net change. So they are slowly gaining the levels in the case of GBP Yen. Then CHF is showing 2 pips negative net change. Then Canadian dollar is flat and Aussie is showing 4 pips negative net change. You know that Canadian dollar was also showing negative net change just about 1 minute back. So they are making the contrarian move in the commodity process, and also they are trying to firm up. GBP, Yen, slow moves they are making it, and GBP they could just reach for the high little bit, about 66.80 or 89, and then start making the slide. So whenever they make the quick moves during that of the early or the late sessions, try to take positions when they are near the high, reaching the high and going above, and stop cutting the new high for more than 30 minutes. You can take a sell so that you will be able to book profit on the downside swing. So wait for them to increase the spread between the low and the high to more than 40 pips, and then try to initiate entering into the market. Otherwise, the holding time will be more. So what we do is we note down the initial lows and the highs around 3:30 GMT and try to compare the market with that of the initial lows and the highs. And during the early or the late sessions, we try to enter into the market. If it is near the low, we'll try to take a buy when the low is not been breached for more than 30 minutes, and then keep the hedge order to limit the stop. And also, once a position makes profit, we keep stop at entry and then trail the stop, and also keeps 45 to 75 pips take profit order and try to close the position using a trailing stop or a take profit order. When the going is good, we can continue to use the trailing stop and move the take profit order away from that of the market so that we'll be able to maximize the profit. This is how we try to do the money management and also try to earn with less positions in the market. Because many of the traders lose the account or lose positions because of over trading, taking too many positions when the market looks very subdued, and afterwards when they suddenly make a move against them, then all the positions start making the loss, and that will be a big loss, and the usable margin will erode substantially. That will create the fear for them to cut the positions. So instead, take only 1 or 2 positions and try to see that you are able to earn on those positions. Let them take the market anywhere you want. If you are trading without a stop, try to see that you close the positions with a profit or with a minimal loss. Then you think of another trade. Then if you think of using the strategic trading technique, use the hedging. Simply doing the averaging every 30 pips, 40 pips gain or loss will not give a good result. And some people think that when the market is near the high, they can take a sell position. When the going is good, they continue to sell during the drop. And the last one, they will get struck because they have to reverse the market. And when the last one is making loss, they should be able to close all the positions. If they wait, then the market might reverse like this, and which may give that your average sell level is much lower than that of the market, and all the positions will take the usable margin, and that may create more fear. Instead, the right way of doing it is try to take a sell position, and next sell you will take only after 100 pips rise. Keep a determination like this, or 150 pips rise, so that your average will be much closer to the lower market. And if they drop about 50 pips, you will be able to have a break even and exit out of the position. Don't get struck by using some ideas, thinking or without having an understanding the market spread in a month. So you know that they can make a move for about 1,000 to 1,100 pips in a month. In that process, averaging every 30 pips will induce you to accumulate so many positions. Instead, if you average it with 100, 150 pips, you might take only 4 or 5 positions, and still all the positions will be able to close it with profit. Wait. And the other strategy is using the stop. So you can use the stop, but predominant of the small traders find that when the stop is used, the stop is hit. So in such a scenario, try to use the hedging order. And if it is hedged, you try to see that you are able to exit out of the hedge with no profit, no loss, or try to book profit during that of the either way stop and moves in the market. So especially during the month end and the new month beginning time, if you use the hedging, you will be able to really make good profit on either side moves of the market. Today, unusually, the market is showing very subdued moves. So let us see how exactly they are going to make the moves during the European session. So I'll answer to the questions which are asked. Guganathan has got a question. What did they do with the GBP yesterday? So yesterday they made the either way stop and moves in the case of GBP that they quickly, during start of the European session, they made a quick downward move to that of 1.66 and pretended as if they are going to drop and then gained the levels very quickly and made the new high, breached the high in a matter of about 30 minutes after making a downward move. They quickly gained and breached the high. This is a false move on the downside or a stop on the downside, and then they went down and breached the high and stayed above there for 30 minutes and stopped cutting the new high. After that, then after 2 hours, they started coming below that of the initial high, which is an extended move on the upside. Then followed by that of, they made a downward stoppment, and by the time the session get over, so they came down to that of 65.84 during that of the downward stoppment, and then started gaining the levels again during that of the US session. So this is the nothing but either way stop and moves in the case of GBP in order to change the market sentiment alternatively to confuse basically the traders. Then Karthik Rajan. Still silver stay in the same range for almost 2 weeks. When can we expect it to drop? Month end they are expected to make the slide in the case of commodities. Then NATO. May you please show again the slide 2 to 5 years. I'll show all the slides again. Then Mason. The time column is in the live code page. Is the time for each session? Yeah, this is actually the time that New York time they are showing it. And my advice will be use the GMT time for that. So in FX Street homepage, we come across the GMT time is being shown, and that can be used to read the market because you need to follow the market using the market timings. The market timings are here. Japanese, European, and US sessions, and each session is subdivided into early, mid, and late sessions. So first 1.5 hours and the last 1.5 hours are the early and the late sessions. In between time is the mid session. Similarly here also in the case of European session and during US session. Then in between the sessions you come across naturally occurring 30 minutes gap, which is referred as a gap time. The players try to do the stop-ins or sometimes false move during the gap time. I'll show the forecast. Then during Japanese session, GBP stayed above that of the high for more than 2 hours and dropped. I thought it was an intentional move. So when it stayed only for 2 hours and dropped, how can it be intentional move, sir? It will be only an extended move on the upside to make it slide. See, more than 30 minutes up to 2 hours is the extended move. Beyond 2 hours, if they stay above that of the initial high, then only it will be intentional. And especially during that of the trend reversal time, the month end time, we are known to make some quick moves. So we should be prepared for that, and we should aim to do only swing trade. So use that stop at entry or trailing stop or hedge order to limit the risk. These are all must. The last half an hour, the previous high was also breached. I think he is referring to that of the GBP. I told you that it has gone above that of the initial high, 66.62, and staying above that. So for more than 2 hours. So they will try to gain the levels, and then afterwards the session change comes. So the next session they will try to make a quick upward stop and then start making the stop. That is why we use the forecast here. So swing and firm up, then firm up, and then drop. So you know that GBP is making the move. So wait for GBP to firm up and form the new high during start of the European session. So 8 to 8:30 GMT, if they stop cutting the new high for more than 30 minutes, then you try to take a sell. This is how you have to fine tune your trading. That is why I'm giving all the information free of cost. And if we expect spoon feeding, then it will be difficult. Because we need to understand, only then your market fear will go away. Once the market fear goes, then you will be able to read the market properly, even without a forecast, with the help of the market reading technique. But even if I give the forecast and hold your hand during trading, your fear will not go until otherwise you understand them. Then Jaku, can you differentiate between technical trade versus position trade, swing trade? Okay, technical trade is the one, so when they are holding above that of the initial high, in the case of GBP 1.6662, that is the initial high, they are holding above that. So when they hold it for more than 30 minutes above that, you can take a buy and try to close it during further rise during the late Japanese and the start of the European session. That is technical trade. When a technical trade is taken, we try to close it within the session or maximum during the next session, if it is an intentional move. Similarly, on the downside, we can sell below that of the initial low and try to book profit when they drop it further down. So that is technical trade. We have to close it within the same time. Then the position trade is the one we understand the overall trend in the market in a particular time frame, like a month. So during the trend reversal, we can't do position trade because they will make up and down move. During the trending move time, so suppose 0 is around 1.34, then we can take a buy and keep hedge order 30 pips. And once the position makes profit, we keep stop at entry and wait. Because we know that in the month of January, they have been doing the upward trending move. Then we can wait for the moves to happen and use the trailing stop of 75 pips away from the market. And once they reach the peak, we can book profit. That is position trade, taking a few days to close the position with a maximum profit of 200, 300 pips. Then swing trade is the one when they are making a swing between the high and the low, we try to enter and exit. That is swing trade. Then move on into the last half an hour, the previous high was also breached. I don't know which pair you are referring to. Can you explain the difference with that? Okay, how about Aussie? Aussie is making the high level consolidation slowly. They are expected to make the drop because they handle the Aussie crosses to start with, and then later on the upside, and then they are expected to make the slide during the trend reversal time now. So let me just conclude the webinar. So these are all the expected market moves in this particular week. And also next week, they are expected to continue it. And the expectations of the forecast algorithm is the downward move in the case of Euro and GBP, but it's not appearing as if they are going to drop. But the players make the market moves only in such a way so that the traders get caught unassumingly. And this is the range in which the currencies could trade in this particular week. And with regard to the initial lows and the highs, in the case of GBP 1.6662 is the high. They have breached and they've gone above. The rest of the currencies, they are not breached the high or the low, indicating either it will be low volume or a slow consolidation before making further moves. And they are expected to make a firm-up move to start with during the late Japanese and the early European session, and afterwards they are expected to make the slide. So this is the trading strategy I mentioned, and along with the forecast, we need to follow the market timings in order to fine-tune our entry and the exit. Early and the late sessions, they handle the majors. Mid sessions, they handle the crosses. So I'll come back on Thursday, 27th February, and take up yet another session of Asian session live market analysis. At the time, I will review the forecast, what I have given it, and also try to find out what the market could make on 27th and 28th of February, back end of the month. Thank you one and all. Wish you all very happy trading. See you on Thursday.